Dear investor, Edelweiss Private Wealth is pleased to present to you the latest issue of Investment Strategy Report for July 2021. Let's take a look at key highlights of June 2021. Lockdowns imposed in April and May, subsequent to second wave of COVID, had a sobering effect on Indian economy. The GST collections dropped below 1 lakh crore for the first time in calendar year 2021. Consumer sentiments were subdued across sectors as reflected in various demand-side indicators. However, the second wave of COVID seems to have peaked out in India, resulting in easing of lockdown restrictions. Increased momentum in vaccination also gives the hope that the rebound in mobility will happen sooner rather than later. Some green shoots in the economy can be expected as the employment scenario has started to show signs of recovery. So far, even the monsoon has been benign and well distributed spatially, which is expected to bode well for agricultural output. At global levels, as expected, the developed economies are showing a much faster and robust recovery. Particularly in US, economic activity has picked up well as reflected in significant drop in unemployment. Equity view. Indian equity markets witnessed revised interest of FIIs after an outflow in previous couple of months. Mid-cap and small-cap stocks continue to outperform their large-cap counterparts. Fundamental elements like earnings growth and profitability have shown signs of recovery and are expected to continue despite a probable blip in Q1 financial year 2022. Profitability of Indian corporates has improved despite weak top-line growth, which has happened due to sharp cost rationalization and gains from input prices. Earnings growth across sectors is looking promising even on 2 years CAGR basis. Muted consumer demand and subdued employment during lockdown can act as headwinds to the performance of Indian equities going forward. However, recovery in corporate earnings, sustained capital flows, and steady rise in vaccinated population indicate limited downside. We continue with marginal overweight call on equities. Corrections, if any, should be used to align with tactical asset allocation across risk profiles. Fixed income view. Higher fuel prices have pushed headline CPI inflation to a 6-month high, strongly beating the consensus estimate of 5.4%. On the other hand, WPI is looking accentuated due to low base effect. On 2-year CAGR basis, WPI has risen by 5.3%. Yields at longer end of the curve remained almost flat in the last 2 months after normalizing from the high of 6.25% in March thanks to RBI's ongoing OMOs like GSEC acquisition program. As a result, the yield curve continued to flatten, though still it is much steeper than its long-term average. Investment opportunities in high-quality credit have significantly diminished. High-yield credit can be considered subject to appropriate due diligence. The credit risks can be expected to cool off as systemic risks will decrease with recovery in economy. RBI's accommodative stance is expected to continue till economy gets back on track. However, rising inflation may dampen interest rate scenario. While spreads of both AAA and AA are almost unchanged, dislocations in spreads still persist in high-yield credit, which may be opportunistically used. Core allocation to high-quality credit with diversification across investable credit spectrum in yield-oriented HTM solutions is advisable.